Hey everybody, good morning. Good morning. It is about 8:15 in the morning here. It's the 14th of October. It's Friday. So, if you're on the Discord, you know what that means. Lotto Fridays for day trades, play small. We're going to look for, small risk, high reward type plays, but again, small risk, play small. So anyway, yeah, today is Friday. It's the last day of the week. And so we're going to kind of take a look and see what's happened over the last few months here, because I think what happened yesterday is really important to understand. So just to kind of take a look at this again from a bear market perspective, because that's what we're in right now. Of course, until the last seller has sold, we're still going to remain in a bear market. So, of course, before I get into all of this, as you all know, it's not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research, and I'm just giving my opinion on the market here. Track record over the last couple of months has been pretty good, ever since basically June, right? So let's go ahead and kind of move into things, just kind of with the premise that, I've had a pretty good track record here, but at some point I'm going to be wrong. All right. So let's just think about that just a little bit. So what I want to do is I want to kind of compare the rallies that we have had, and, look and see what has happened after those rallies have completed, after they have finished. Because I think it's kind of important to realize, what's going on here. So, we've got some cycles going on here. And by cycles, what I mean is we've got basically, moments where the market is going into a little bit of a trough, right? And then we also then, of course, have, the peak. But when we have a peak, what has been happening here is we've been moving down lower. We have this trough, we have a peak, and then it moves lower. So what did we just recently have, right? We had a trough, right? And then we've had a peak. And of course, we now know so far it has gone lower, right? You can throw Fibonacci on this all you want. It's still going to make sense. But at the end of the day, let's just take a look at these drawdowns that we have after the peak, because I think it's kind of important to note. Every time we've had a drawdown and it's made a new low, we've seen a rally of some kind. All right, so I'm going to point out this guy right here. I kind of make that a little bit smaller, just kind of looking at that new low and a nice rally off of it. We had a big rally off of that, right? And then same thing right here. We created a new low, right? So we have a low here. Okay, let me see here. Let me do this. I just want to illustrate here. We've got a low right here, which was a lower low from here, and we had a significant rally off of it. Again, we have a low here, which is a lower low compared to here, again, after a peak, right? And then we had a significant rally off of it. And just to point this out, peak, peak, every time there was a new low after that peak, there's a rally off of it, okay? We had a peak, new low, rally off of it, okay? Now, again, we've got a low here. We have a big peak, okay? We created a new low, and we had the biggest 2 days that we've had in a long time, okay? Big rally off of that. Created a new low here, and what happened? We had one of the biggest days that we've had in a really long time, biggest single day, okay? And I think that's important, okay? It's the biggest single day that we have had, okay? You all remember last week, right? Or is that too far in the past? Last week, we had the biggest 2-day rally that we've seen in a long time. Let me just point this out. From the low to the high right here, we moved up 5.8%. That was a big 2-day rally, okay? Yesterday, however, from the low to the high, we had a 5.56% rally in 1 day, okay? We almost went up the same amount that we did in 2 days last week. Why is that important? Well, a couple things. First off, the rallies are coming faster and harder than they have in previous times, okay? I'm going to point out this rally over here from this new low to this high up here. Again, it was 5.98%, and that went from Tuesday through the following, basically Friday, Tuesday through Friday. Because to be fair, that high happened on Monday. So, okay, all right, I guess that is 4 trading days it took to get up to that high, the almost 6% up. Then, of course, and I just mentioned this already, from this low to this high here, 5.8%. Took 2 days for that to happen, half the amount of time. Now, what did we have? We had, in 1 day, half the amount of time, we had a 5.5% rally. Okay? So you kind of get the idea. 4 days, 2 days, 1 day. Okay? We're decreasing the amount of time that these rallies occur, and each time they have occurred, what has it resulted in? Well, I mean, I don't have to tell you. You can see for yourself. Move down, right? Big move up, big move down. So what's going to happen this time? Great question. All right. So there is a couple things that I want to look at. And what I am going to do is I'm going to move to the ES chart to show this. Let me do it on SPX 500 USD because I know I don't have a whole lot on here. I'm going to take a look at let's go down to the 1 minute. I just want to take a look at yesterday because what happened yesterday is really interesting to me. All right, so from these lows, let's just go ahead and just draw this out, okay? So first off, from this low here, I count a 1, 2, 3, 4, 1, 2, 3, 4, 5, ending diagonal, right? So I'm not going to, get into the to the lower counts, the lower subdivision on this, but I want to point out the fact that we did have a little bit of an end diagonal going into this wave 1, all right? Then we had an ABC correction, and from here, a 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. Okay? So we've got another 5-wave structure up. And then, of course, another ABC, a larger ABC. Let me put the ABCs in here just so that we can put the corrections in. I think this is important just for confirmation bias. Again, I mentioned just the other day, Elliott wave is only, or should be only, a part of your analysis. It shouldn't be the entirety of it. Okay, so from there we had a little ABC. Then we are working, in my opinion, on finishing wave 5. It could already be done. Okay, that wave 5 more than likely is done, just for the record. What I want to do, again, is from this peak up here, just kind of draw this down. We don't have any confluence with this wave structure up here. But again, it doesn't look pretty because of the choppy overnight pattern that we have. But I could count a 1, 2, 3, 4, 5. If I had to try and put a count on that, that is how I would count that. And again, let me just go ahead and take off the counts, right? So let me just take what I've put on there off, right? Just to remove any bias that I currently have on that wave structure, okay? And put everything in view. Maybe go to a 3-minute time frame just so the candles are a little clearer. Because what I want to do now is I want to take my trend-based fib extension tool, pin it from the bottom, go to the top of where I think wave 1 is, and let's go down to wave 2. Okay, so from here, all right, is it possible this was wave 3? Of course, I had wave 3 up here. It's possible this was wave 3. We hit a good area of confluence for a wave 3, and we tapped where a wave 5 target would be. That's right up there at 36.84. And again, I'm looking at SPX 500 USD, which is closer to the real SPX index versus the ES chart, which is, a little bit off. But at any rate, we hit fib targets perfectly based off of, again, this low, this high, and this pullback. So there is significance to these 3 points, which creates significance to the points at the 1618 to the 175, and also the 2618. So now that we've done that, it's reasonable to assume that we are close to a top or at a top. I've given you several layers of evidence that we could be creating a top, and I'm going to give you one more. I'm going to go to an hourly time frame, and what I want to do, I want to take a look at a fib retrace from this high here to this low here, okay? And I'm going to put my 618 and 65 on here. Where are we currently rejecting? So we are currently being rejected from the golden pocket, okay? We did go a little bit beyond the 65. I will acknowledge that. So, right here, we did extend beyond the 65 a little bit. But so far, we've had 1, 2, 3 rejections from that level, going down to a 5-minute time frame. What else can we see from this structure right here? Again, just looking at this. Very, very possible. Let me just remove these guys for a moment. I'm going to give you one more layer. We've got a left shoulder, we've got a head, and then we've got a right shoulder, and we even have a little bit of a neckline right here, which is in descending form, which is not very bullish at all. What do I need to see from here? Okay, what do I need to see from here? First off, I need to see a break of this neckline. If you're going to play a head and shoulders, you really need to wait for the break of the neckline. Where is your target for a head and shoulders breakout? All right, well, let me just squeeze this down. We're going to measure from the top of the head to the bottom where the neckline is. And I have a template here for measured move where I've got my target at 3608. So assuming we take this guy out and then we continue to move down, my estimation is our target is going to be right around 3608 to 3600. Is that going to happen today? I don't know. Is it going to happen on Monday? Maybe. Is it going to happen? More than likely. Especially if this neckline gets taken out. So what does that mean? Does that mean I'm short? I did reopen. I'm going to emphasize reopen a small short position after the close yesterday, about 4:15, 4:30. I issued an alert. I'll go ahead and tell you guys all this. I issued an alert. Hey, I'm going to go ahead and open a small short position here. We really cashed out almost everything yesterday. Yesterday, about 10:15 in the morning, somewhere around there. I don't know the exact time. But what I started to see was this strength. And so, it was roughly around here. I was like, yeah, I'm going to go ahead and close all of the major short positions that I had. We were short on Apple, we were short on SPX, and I know there were a few members that had other shorts in different things as well. But I was like, yeah, we need to close this out. We've been holding them for at least a couple of weeks, so we need to close those out now. And, of course, we had massive rallies. We were able to capture some significant long positions on the way up. We got 200% on one, 300% on another. Were just really crazy plays yesterday. One of them, if they were to have been held, it would have captured, I want to say, something like 1,400%. It was ridiculous. We got into a 35.80 call yesterday at just about $6, and when I was checking it at about 2 in the afternoon, it was up to about $82. Didn't hold it that long, obviously, but that would have been insane if we did. We were able to catch a 36.40 call, which we got for under $8, and we got out of it at about 40. So one way or another, there were some great plays to be made yesterday. Short term, if you're able to capture those, there were some really great opportunities there. But the fact that we're sitting up here at the 618, the fact that we're creating a little bit of a head and shoulders, I don't want to get too far ahead of myself here, because head and shoulders do tend to fake out every once in a while, and I don't want to get caught in a head and shoulder bias. But right now, it looks like we're probably going to close today, maybe Monday, maybe Tuesday. At some point, we're going to get back down to 3,600. I feel pretty confident on that. What would invalidate that? Well, if we end up closing, say, an hourly candle above 3,700, right? Somewhere up in this area up here. If we were to close an hourly candle above 3,700, just a clean break above 3,700, I may revisit what I'm currently thinking the market is wanting to do. But for right now, what this looks like, it looks like we are getting a 618 rejection, which honestly does put our target down here at 3,400, which is where we've been targeting for a while now. It could be that we go lower, just for the record, because I want to make sure everybody's well aware of this. There's a 1, 2, 3, 4, 5 structure here, okay? I can count 5 waves down. And then, although I really can't count, 3 waves up, we do have a nice big move up here. And we're hitting some resistance, some strong resistance. So again, if we break through here, chances are pretty good that next level is going to be 37.22. Then after we break that, we're really clear up to about 38 to 38.30. So just be very careful about being too short. We've been doing very, very well, so we're trying really hard not to ruin that because it's very easy to get into a bias where we now know that puts are paying. But then what people tend to start doing is getting more aggressive. And then days like yesterday can ruin a trader. And we don't want that to happen. And again, I mentioned that because, it's important to realize that, we have these days where we have significant moves up, right? From this low to that high, that's 7%, right? From this low to this high, that's, almost 7%. From this low to this high, we've got 6%, right? And then, of course, we know what happened throughout the month of July, which I said in June that July was going to be bullish. Well, shoot, we had a 15% month. Actually extended into August a little bit. So the next month and a half returned about 15%. But now we've had these rallies that have been sold off. It's been rally, sell off, rally, sell off, rally, right? Unless we make a new high here, I'm going to remain bearish. Okay? That's really all that I've got for you right now. I know I'm kind of saying the same thing over and over, but what I'm trying to kind of help you guys understand is the fact that after each rally that we have had, we've had a little bit of a sell-off, okay? We did peak above this trend line. I was just drawing this to kind of see where things were. We're still under the trend line. But again, my bearish invalidation level at this point is going to be about right there at about 3,800. If we get up to 3,800, we're going to create a new higher high on these lower time frames. That, again, would lend to a more bullish outcome, right? If we get and close above this trend line, if we get close above 3,700, I'm going to start getting a little more anxious, but it's really that 3,800 level where I'm going to really get super bullish. And I know I did talk, I'm going to say this one last thing here. I know I did say this a while back, but, we were talking about these levels and, from our high here, let me just go ahead and illustrate this for a moment. From the high to the low, let me put my normal template on here. So we've got, again, talking about this 3,800 level. I'm willing to start going long from 3,800. My target would be about 4,300, which would create, honestly, a double top, right? That's a 13% move. Am I going to be interested in a 13% move more than I'm interested in risking a 17% move? We're talking 4% here, guys. I'm willing to risk 4% before I start getting bullish, right? I need to see some validation that we are bullish before I start getting bullish. Because, honestly, it would make lots of sense for us to start to see, a 1, a 2 down to 3,600, a 3, a big 3, a 4, and then a 5. Is that going to go into Christmas? Well, we'll just have to wait and see. But I'm willing to take that trade up here to wave 5 because, again, we would create a little bit of a double top. It does create a little bit of 2018 vibes. So just thinking in terms of that, if we start to break some of these levels, then I will start to get a little more bullish and start to be targeting that 4,300 level. Are we going to go higher than that? I doubt it. I really honestly do. I doubt we're going to get that high. But it would make a lot of sense for us to create a pattern that looks, basically like this, like a little bit of a running flat, getting back up there to the same level that we had up here before we start seeing a big move down into next year. It's not what I'm expecting, but if that happens, that's likely what's going to happen next year. Right now, again, if you've been following me for any amount of time, you know that I'm expecting a down move into the end of the year, maybe January, and then I'm expecting the next few months to be bullish. And again, still targeting up here at about 4,300. And then again, after those few months of upside come and go, going to be looking at more moves to the downside. All right, that's all I've got for you right now. I've been talking for way too long, 20 minutes here. I'm going to go ahead and end the video. If this video did help you in any way, shape, or form, you know the deal. Like, subscribe, share, all that good stuff. If you need access to our Discord, you can find all that information on BitDoctor.org. If you need access to our bi-weekly newsletter, BitDoctor.org. If you need access to our Wavemaster indicator that we use in all of the trading that we do, BitDoctor.org. And last but not least, wherever you are in the world, I hope you're having a good day, good night, and a good evening. Take care, everyone.